Tax deductions that are popular for landlords. Certainly, people are deducting mortgage interest, property taxes, insurance, commissions, those type of things. But some deductions that we come along that especially new clients aren't taking that I think people should be aware of. One is in the last couple of years, there's a deduction for up to $2,500 of personal property that a lot of real estate owners aren't aware of. So for example, if somebody buys appliances, blinds, those type of things, normally people depreciate those over 5 to 7 years. And with this new law within the last couple of years, if you meet certain requirements and you make certain elections on your tax return, then you can deduct 100% of these amounts up to $2,500 of costs of personal property. So it's important that when you speak to your accountant, if you're doing any of these things, adding appliances, whatever type of improvements that you're doing to your units, that you make sure that your CPA is aware of those. So that's one deduction that we see people are missing. Another one is something called bonus depreciation. And what that means is that people can write off up to 50% of the cost on new personal property items. So for example, let's say that you have a high-end rental and you're putting in a $3,000 coffee maker. Well, that's above the $2,500 limit in the first example I gave. So normally people would then write that off over probably 5 to 7 years. But with bonus depreciation, you can write off 50% of that $3,000 in the first year. So look for 50% bonus depreciation on new personal property items that you're purchasing. Another thing that we see people miss is that when real estate agents or real estate owners are refinancing their properties, all those closing costs you get to write off over the life of the loan. So people, when they refinance their home mortgage, unless they're paying points, they don't get to write off any of these escrow costs. But if you have a rental property, then you want to make sure that you capture those costs and write those off over the life of the loan. So we see that being missed. Another item that we see being missed is that if you're traveling to your rental property, even if it's in town, maybe you've got to drive 30 or 40 miles, you are allowed to deduct the IRS mileage rate limit for miles, which is roughly 56.5 cents a mile. So if one is driving 3,000 miles a year or 2,000 or whatever it is, then it's, there's an additional deduction there for the standard mileage rate. So those are 4 of the expense items that we see a lot of people missing. When we get new clients, they aren't deducting these things. Everybody's aware of mortgage interest, property taxes, all those type of things. But again, the $2,500 expensing that you can do on appliances and those type of things. There's the 50% bonus depreciation. There is the writing off the refinance, the escrow costs, and then finally deducting your car expenses. So those can add up to a lot of expenses.